Welcome back to another video on the playlist from scratch to profitability in forex trade. In this video, I'm going to be sharing with you, I'm going to be teaching you guys how market moves, understanding market structure, understanding what is support and resistance. So very quickly, we are going to answer the first one, how market moves. Now, everybody has their own perspective on how the market works, but basically, to me, the market moves by supply and demand. Okay, the market moves by supply and demand. Now, I'll use the parts to draw basically draw a market structure, which means the expectation of how markets works are going to be this is how it moves. Now remember, we talked about that if the market is in a uptrend, it creates higher highs here, create higher highs and higher low, create higher highs and higher low. The same is going to be for every single one of them here. So continue to create higher highs and higher low. Now in SMC, this was the first high. Let's put this on high. This was the first high of the market. Okay. This was the first high of the market. Now, as the market moved above this recent high, it creates another higher high, and the candlestick the market used in going above this recent high is known as a break of structure. So this point in the market is known as a break of structure. The reason why it's a break of structure is because the market keeps following a trend, which means if the market is in a downtrend, it keeps going down, and if the market is in an uptrend, it keeps going up. So that's why this place is known as break of structure, and for the short you can call it BOS. BOS. Now it's going to be BOS for everyone here. BOS. This one will be higher high, higher low. Higher low. Now, the market went down, it created higher low, went up, but it was unable to create another higher high. Rather, it came down to go below this recent high. Now, the market going below this recent high is known as a change of character. Now, there are some criteria here in order for you to validate this place as a change of character. The market has to break below this place with a candle body. Not a wick. With a candle body. So this place is known as change of character, or COC. Change of character. With a candle body, and the next candle has to close below this recent low. When we get to the analysis and the candlestick charts, I'm going to be explaining them to you, and also we identify a lot of things using the candlestick chart. Now that the market has created a change of character, What a change of character means is that the market has changed character from a uptrend. Now the market is in a downtrend. So that area the market used in changing character, more often you will either see a order block here or fair value gap, order block or fair value gap. Remember we talked about what order block is and what fair value gap is in video 1. Now this is where supply and demand comes in. This point at which the market changed character. Now the market trading below that area. If the market retraces back to that area, this area is now known as resistance to the market. This area is also known as resistance. This area is known as resistance to the market. So resistance is what keeps the market from pushing up, from going up at a certain period and certain time, and support is what pushes the market from pulling down, from dropping at a certain point in time. So just a quick question for you. So since the market has changed character from a downtrend to an uptrend, what will this place be? Let's see if you understand what I've been saying. If I said that the only way we have a break of structure is because the market keeps going in its original direction, and for this case the market is in a uptrend, so the market keep going up, creating higher highs. That's why we have break of structures here. That is why we have break of structures here. Break of structure. So what will this place be? This place will be the first break of structure, because we have a change of character from the upside to the downside. Okay. So in this picture now, what you have just seen is basically how the market works. Now this is not exactly how the market works, because I will not be able to explain it using the line chart. But this is supposedly how the market works. It moves from support to resistance, filling liquidity as it moves. Vice versa in a downtrend is exactly the same thing in a downtrend. Let's say the market is in a downtrend. Let's say the market is in a downtrend. Basically the same thing. We have break of structure. Break of structure, we have break of structure. POS, break of structure. We have break of structure. Then we have lower highs and lower low. I have lower high here. This first one is going to be high, which is H. This one is going to be lower high. This will be lower low. one will be lower low. Breakout structure BOS. Basically the same thing. Lower high. Now, just like I said, each time the market change character. So in order for this market to change character now, the market has to reverse and go above this lower high with a candlestick body, closing above this lower high with a candlestick body. Then you can validate that this market has changed from a downtrend. Now the market is in an uptrend. So if it does something like this, this will now be a change of character. Now, usually after a change of character, there will be other block around this level, other block, or fair value gap around this level. When we get to the candlestick pattern, we implement this, and I will use the candlestick to explain it more better to you. Now that is on market structure. That is on understanding how market moves. And number two, understanding market structure. Now, market structure and market patterns, they are very, very more common if you visit the chart more often. If you visit the chart more often, now I'm not talking about candlestick patterns. I'm talking about market patterns, which means something like, there are times where you see a structure like this, market structure, that are more often seen in the market. You see, let's say, a structure like this, structure like this. So the only way you get to see this structure is by visiting the chart more often. So in the candlestick, we are going to analyze the market, and some things that cannot be interpreted using the line chart, I will interpret them using the candlestick chart. Because just like as we said in video 1, the candlestick chart has more details. Now, understanding what is a support and resistance. Support is what keeps the market. A very, very layman explanation is that support is what keeps the market from falling at a certain point. Resistance is what keeps the market from going up at a certain point. Now, there's a little difference between supply and demand. There's a little difference between supply and demand and support and resistance. When we get to candlestick chart, I will explain that to you. But now, support, just like the name said, let's say this at a point, this was a support for the market. At a point, this was a support for the market. This was a support for the market. We represent support as, okay, let's just write the full name, support. Okay, support. That's so small. Let's use this one. support, and then if support is below, then resistance is supposed to be above, right? Just with that simple explanation I gave to you, resistance is what keeps the market from pushing up at a certain point. Support is what keeps the market from falling at a certain point. Now you need to pay very close attention to this support and resistance, because it's how the market works. The market moves from support to resistance. It moves from supply to demand. Okay. Now, if peradventure the market went back and start pushing up, which means the market start going up, if the market gets to this level, what kind of reaction do we expect to get from the market? Just by explaining what support and resistance means to you. What support and resistance mean? What kind of reaction are you expected to get from this market? You are expecting the market to do something like this. You are expecting the market to react to that level by pulling back, because that area is a resistance area. Not every area on the chart is support or resistance, and not every time frames, and not all support and resistance works in every time frames. There are time frames where support and resistance is more valid and is more active for the market to react to. The market don't just react to any support and resistance. When we get to the candlestick charts, we explain how to spot a valuable support and resistance, and how to take decisions based on the candlestick patterns you will see there on the support and resistance. So that is what support and resistance is. It's a very, very simple and very easy something to understand. It's just like when you are in your house. Support will be your ceiling, which is your roof. Support will be your floor, which is the ground you are sitting on or standing on. That is the support for you. While your roof or your ceiling is a resistance to you. So that's how it also works in the market. When the market gets to a level of support, we are expecting a reaction. When the market gets to a level of resistance, we are expecting a reaction. Now, when we move to the candlestick chart, we will then spot something like fair value gap, order blocks, candlestick patterns, and with time, we will also take live trade using these strategies. So just know that in this video, we deal with market structure, how market works, how market moves, understanding market structure, understanding what is support and resistance.